Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report covering the month of October. The big development of the month, of course, has been a pretty solid backup in bond yields. This follows the Fed having surprised markets with an aggressive rate cut of 50 basis points in September. Bond yields did rally on that. They liked it. But we've seen in October something like a 50 basis point rebound in 10-year bond yields, both in the US and in Australia, as what had become quite aggressive rate cut expectations, particularly in the US, have been priced out somewhat. And that followed generally speaking, fairly solid economic data still coming out of the United States. The September payrolls report in particular showed strength of something like 250,000 job gains in the United States. Now, that's since been tempered by a smaller gain of only 12,000 in October, but the September number really jolted markets through October. I think another factor on the bond yield front, of course, is the market's growing expectation that maybe Donald Trump is going to win the US presidential election, which of course he has won. We do know that that is now the fact, but markets were concerned about, the fiscal implications of Trump. He's obviously been talking about tax cuts. He's talking about raising tariffs, so things that are potentially inflationary and could put upward pressure on bond yields and cause the Fed to cut back in terms of how quickly it'll be cutting rates through next year. So the net result of all that, of course, has been that increase in bond yields saw fixed rate bond returns go into negative territory through the month. The global equity all country world index down 1% in local currency terms. Now, interestingly, in unhedged terms, global equities actually had a positive return, something like 3.5%. So a mixed picture for equities in that the unhedged equities are positive, but it was largely a currency gain. Australian stocks are also down, broadly similar to global markets, down 1.3%. Look, going forward, I think the key now will be markets digesting, what exactly Donald Trump is planning when he gets into office. There are some positives for the market. Deregulation, tax cuts can be, obviously stimulate consumer spending. So these are positives the markets, at least initially, are focusing on, and equity markets have since rallied with the confirmation of his victory. But the negatives will be, the impact of tariffs and trade wars if they eventuate at some stage down the track. So we'll be grappling with that, and also grappling with the, what does seem a still fairly solid US economy, and maybe the rate cuts markets we're hoping on won't be as drastic as expected through 25, and maybe the markets need to reckon with that somewhat. That's pretty much it for now. If you'd like to see further details of my market trends report, please visit the insights section of our website. Thanks for watching, and I'll see you again next month.